Michael Katounas, you're the Director of Credit Suisse based in Dubai. Can you tell me about your role?
Let me start with Credit Suisse. Credit Suisse is present on the ground in the Middle East across all of our three divisions: investment banking, private banking and asset management. My role is within investment banking to focus almost exclusively on real estate companies, both in terms of investments and in terms of fundraising for these companies.
There's a lack of liquidity in the market at the moment that's created a lot of problems for companies and projects. When will this liquidity come back?
Indeed, it has been the main problem in the last couple of years, and a large number of companies, projects and investors have run out of funds to proceed with their planned projects. We see liquidity coming in gradually into the market. It's already there for the large corporates. Debt capital markets are pretty much wide open for them. They have access to investment grade bond financing. They have access to the high yield bond market. The latest developments on the convertible side, which is a very innovative, if you want, or new part of the market, is quite promising. So there is liquidity from that market also. The problem we have is on the bank market. Banks effectively are not giving out financing, and the constraints there are two-sided, if you want. One is a constraint imposed by the regulator in each country, which limits the total amount of exposure you can have on real estate. And the second side of the equation is banks have overextended themselves in the past on real estate, and currently they are much more skeptical about giving money to projects or companies where the actual return for those money is way into the future.
Is the Middle Eastern real estate market attractive to international investors at the moment?
Very much so, but not across the board. You have pockets of interest that are that compare quite well with the rest of the world. For example, if you look at countries like Egypt or Saudi Arabia, you have a significant population size and growth, which translates into quite interesting demand dynamics, and investors want exposure to that market. On the other hand, you have large corporates in the rest of the Middle East, particularly in the GCC, that are backed by very strong governments. And that support translates into an easier to manage risk for investors. So investors look at the Middle East today two ways: either growth, and they go to the large countries where you see the population growth, or yield, and in that case they focus on the government-related real estate companies.
So what options do people have if they want to finance real estate now?
Large companies, as I mentioned, can go to the debt capital markets. Smaller companies typically would start with equity, but we see an emergence of more innovative ways of financing companies. There are a number of mezzanine funds that are focused on the real estate market. What companies and investors need to obviously understand is that in the new world, the dynamic of a project, the returns expectations and the funding has to make sense given the current market situation. It cannot be a very long-term blue sky scenario. It has to be a realistic scenario, and if a realistic scenario is put on the table, funding is available.